What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we had another relatively flat day across all of the indices. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did go up 0.16% and we did close right near that resistance level at $420. Remember, SPY is in a full bull trend and all of these moving averages are stacked to the bull side and they're now positively sloping. So the trend is on the side of the bulls and that should help push the price action higher. However, we still need to get a decisive break above 420 to get to our next price targets above at 423 and 425. Remember, we need the price action to break and close over these resistance levels to validate the next price target. So right now, even though we did close above that 420 level, we only did it by less than $1 and it still could be a fake out. So just have caution at these levels because these are very critical resistance levels. And that's why we see the stock market trading sideways at these levels. This is a strong resistance level at $420, so when we finally do break out of it, we could get to the next price targets in a hurry at 423 and 425. But right now, those are still strong resistance levels that we haven't got that price action decisively breaking above. Downside critical support on SPY is still this 20 simple moving average, which is now just a little bit above 416. An early warning sign would be a price action close on SPY below 417.5. So continue to watch those critical resistance and support levels, and do remember that the trend is on the side of the bulls, so right now that is going to give an edge to the bulls for the price action to continue to push higher. If the price action does break down below critical support at 416, look for the gap fills below at 411 and $400. On the NASDAQ 100 triple Qs, we went up 0.2% today, but the triple Qs can still not break and close above that critical resistance level at 334.6. Remember, as long as we're trading below 334.6, there is risk in the triple Qs that we're coming down for another leg lower into the low 300s. We see that 20 simple moving average is still below the 50 EMA, but it is starting to curl back up and it does look like it's trying to get to a positive slope. If that 20 simple moving average crosses back above the 50 EMA, that will be a full bull trend on the triple Qs and that could help push the price action above that critical resistance. On a break above 334.6, we will have price targets at 337 and 339. Critical downside support is still going to be right around the 50 EMA, which is now curling up to about $329. So watch critical support at 329, and if the price action does start breaking down below 329, that will be a bearish breakdown and we are likely coming to close the gaps at 323 and 315. On the Dow Jones, we went up 0.14% today, and the Dow Jones continues to slowly creep up and closing above the 5 EMA and still holding on to the bullish trend. The Dow Jones did close that gap above yesterday, and today we didn't really see the Dow Jones following through much and continuing to push to the upside. However, this is still just a low volume melt up situation and we still do have resistance above at 348. If the Dow Jones closes above 348, it will validate the next price target at 350. Critical downside support on the Dow Jones is at 343, 341.7, and then the 50 EMA right around 338. On the Russell 2000, we were up 0.12% today, and the Russell 2000 did look like it was trying to break out of our resistance trend line, but it did fail to break out and it did close back within the wedge. We have critical downside support at 227, the gap fill at 224, and that 50 EMA right around 221.7. Critical upside resistance will be the breakout level at 228, and then we'll have resistance at 230 and 233. Note, the Russell 2000 does not yet have a full bull trend because that 20 simple moving average still needs to cross back above the 50 EMA. Remember, it's still possible we close this gap before we try to break back out yet again. On the ARKK ETF, we were pretty flat for the day, only going up 0.04%, and ARKK continues to struggle to break above this critical resistance level at 112.7. We also have the 50 EMA at 115, which is another critical resistance level that the ARKK ETF will have to break back above. Remember, ARKK is still in a bear market, and even though it is trying to reverse the bear trend, it's still trading below the 50 EMA on the price action, and it's still vulnerable to go back for another leg lower. Watch for support levels at 109, 107, 106, and 97. 97 would be somewhat of a double bottom attempt, and if we break down below 97, we could be going back down into the 80s. So be careful on ARKK because it's still in a bear market and it could still have another leg lower. On the VIX, we dropped a little bit today, going down a little over 2%, and we see the VIX closing right around 17.5. We did see the VIX bouncing off support at 16.65 yesterday, and we didn't see any real follow through today because the VIX did not break above 18.2. Remember, as long as the VIX is below about 20 or 18.2, it's still possible that's a bullish VIX and we continue to go up higher. If the VIX breaks back down below support at 16.65, that will confirm that we're definitely going to see new all-time highs. Remember, the VIX is a measurement of fear, and if we see the VIX breaking through yet another support level, that means fear is gone from this market and we're very likely going to continue to melt up to new all-time highs. But right now, the VIX could still pop at any moment and start breaking back into the 20s, so it is still something you need to keep an eye on. So watch the resistance levels at 18.2 and 20 and the downside support at 16.65. On gold, we're continuing to climb higher and we're still closing over top of the 5 EMA with a very strong bull trend with price targets above at 1923. Watch support around 1900 and 1876, and it does look like gold is continuing to maintain this bullish rally. On silver, we were up over 1% today, and silver did confirm that breakout yet again, and silver is still holding on to the very strong bull trend while closing back above that 5 EMA. At this point, it looks like silver is going to finally make that last push higher towards our price target at $29. Downside support will be 27.9 and 27.7. On Bitcoin, we're currently up about 2.65% right now, and Bitcoin is still trading below that critical resistance level at 39,000. Remember that Bitcoin is in a bear market and it's in a bearish trend and it's continuing to struggle to break out above resistance. Bitcoin needs a break and close back above 39,000 to reverse the downward trend, and then we need to see a price action close back above 43,000 to try to get Bitcoin back into a bull market. If Bitcoin fails to break above 39,000, look for downside support at $30,000 and $27,000. On Amazon, we were up about 0.5% today, but we still see Amazon trading below the 50 EMA. Amazon is holding that support level at 3209, and if that level does break down, we will also have support at 3138. We have critical upside resistance on Amazon at 3250, and the resistance trendline breakout is right around 3340. Remember, if Amazon can break back out of that resistance trendline, it could start to run, but right now we just see Amazon going sideways and consolidating between resistance and support. So watch that critical level at the 50 EMA and that support level at 3209 to see which direction Amazon is going to break. On Tesla, we see a rejection at that resistance level at 626, and we see Tesla going down over 3% today, closing back below that 20 simple moving average. Remember that Tesla is in a bear market, and now we're seeing Tesla starting to break down and looks like it is going down for that next leg lower. So watch support at 594 and 557. And remember, if Tesla starts breaking below 557, it could be a bad news sign that it's going all the way back into the 400s. So watch these support levels very closely and understand that if 557 breaks down, Tesla could be going back into that longer term bear market and it still has a lot more downside. On Apple stock, we were up 0.63% today, but we still see Apple struggling to break back above the 5 EMA, and we see that level acting as resistance. Remember, on Apple, all of the moving averages are stacked to the bear side, and Apple is currently trying to stay out of a bear market, but it's not successfully doing so. We're in a downward channel with lower highs and potentially lower lows, so watch critical support at 123. If that level breaks down, Apple is very likely coming down to 119. We have upside resistance at 126 and the 50 EMA at 127, and Apple needs to get back above about 128 to try to go back into a bull market. Right now, Apple is a market moving stock and we just see it struggling to go higher, and it continues to trend downward. On the financial sector, we are relatively flat today, but we still see the price action closing above the 5 EMA and holding on to that really strong bull trend. The financial sector still looks like it could try to go higher from here. On the industrial sector, we dropped about 0.25%, but we're still closing above the 5 EMA and we're still holding on to the bullish trend. The healthcare sector dropped a little bit today, going down 0.2%, and it did look like it found intraday support off that 50 EMA. Look for healthcare to try to bounce off this support level, but if it does start to break down below the 50 EMA, that would be a bearish sign, and it does mean that the healthcare sector is likely rolling over. But it's too soon to say that because it could still bounce from here and try to break back up into a bull trend. On the energy sector, we continue to see bullish price action going up 1.86% today, closing well above the 5 EMA, and we see the energy sector getting back into a full bull trend. It does look like the energy sector could try to push up for another leg higher from here. So going back to the S&P 500, we still have a sort of sideways market and we're still consolidating between a critical resistance and a critical support. So continue to watch SPY levels of 420. And if we do break above that, you're looking for 423 and 425 with our critical downside support levels at 417.5 and 416. Remember, if SPY does start to break down, we could be coming down to close those gaps. So understand that is your risk level, and the price action breaking below 416 will signal that we're going lower. But right now we're in a full bull trend, and right now we have to assume that SPY wants to continue to go higher from here. Also remember, on the Stocks Channel Discord, I'm giving you intraday updates and analysis to help you navigate this market and stay on the right side of the trade. I'm also bringing new trade ideas to you weekly to help you crush this market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.